Welcome back, guys. Welcome to my stock market technical analysis video. So in this video, what I want to do is just cover the price action, what's happening today. We got big tech earnings last night. They beat earnings expectations. Earnings, you have to understand, are a little bit subjective, I guess, because the thing is that earnings earnings move against expectations. Let's just put it that way. Positive earnings or a beat of expectations doesn't necessarily mean good earnings. It can mean good earnings. It's just, here's what they were expecting. We beat what was expected. Stocks go up. It's kind of a game they play, basically. But oftentimes, a beat of earnings expectations and maybe you get a rally doesn't necessarily mean that something's trending in the right direction. You might see year over year earnings decreasing. And, if you have a really low bar and then you jump over that bar and there's a beat, oftentimes there might be an initial move higher, but then the big money, the big money realizes the trending, the trends of earnings, and they'll sell into that strength if they think it's a weak thing. So that's all I want to point out. A beat of earnings doesn't mean that that a company is trending, in the right direction, profitability wise or revenue wise or any of that. It's just a game they play where, analysts set their expectations and, they'll sandbag their expectations, and then the stocks will beat the low expectations, and then they'll pump stocks higher. Ultimately, stocks trade against the technicals, I think, for the most part. So let's look at those technicals. Let's get into it. All right, guys, and in my last videos, I said what I kept saying was, it's about what happens during the market. When the market opens on Friday, that's what matters. What happens in the after hours Thursday night doesn't matter. I mean, yeah, it matters in the sense that you need to understand where things are what levels things are gonna trade from, or where they're trading up to. But ultimately, market consensus takes place during regular market hours, and so you need to follow that. So I got a lot of comments in the after hours yesterday when tech beat, saying, look at that, tech's great, this and that. Just ultimately just people kind of trolling me on the tech earnings. And what I said in a couple of comments, I said, well, okay, that's fine, but I only care about what takes place in market hours. I want to see what the big money decides to do. And also, some of these stocks look like they were hitting their kind of high water mark on these earnings, on this earnings pop. So when, that's what I see. So here's what big money decided to do today. They sold, instantly took profit on the tech pop. Big red impulsive selling candle. That's what the big money did. And doesn't mean the selling is going to continue, but you want to make sure that you want to be on the side of the big money. So if the big money's selling, then you should be selling too. And that's what I meant by the high water mark on some of these stocks. It seemed like that was an opportunity to sell into or short into. And so far that's been correct. I actually added to my shorts this morning, and so far, those are playing out very well. Now on the Qs, we now have 3 reactions creating a trend line, a down trend line right here. So we have one on the hourly chart. We have 1, 2, 3. So we'll leave that up there to see if we get any more reactions around that. We also have lower highs. You can see here's your high, here's a lower high, here's a lower high. And each high is being sold into. So every time they pop it up into here, they're selling it off and selling into it. So just something to take note of. And we still have not broke the trend line. Here's your trend line that I have on the hourly. It doesn't come off the lows, the March lows. You probably could draw something coming off the March lows as well. But I'm going to keep this one up as kind of my benefit of the doubt trend line. Lots of reactions, 6 or 7 reactions along this. So I'm looking for a breakdown of this trend line. And if we look at the daily, you can see if we break the trend line, we're not too far away from recapturing the bigger price channel on the Qs, on the daily and the weekly. Well, here's the weekly, and you can see here's your price channel, the bull market in Qs, and we've overshot this bull market. So a weekly recapture back below the price channel would mean this was a false breakout. I think that's what we're going to get. I don't know if we'll get it this week. It might come next week. They might successfully hold it up there this week, but I'm looking for it to see if that happens. If we get that, then that's a recapture of the price channel, and that should set the stage for a move to the bottom of the price channel over time. And then we'll have to evaluate, what's going on in the markets, whether we think the market's going to break the price channel and actually stick. We've already broke the price channel twice, but the Fed saved it each time. So that's why it's been these V bottom recoveries each time, because the Fed comes out and pumps their stimulus game, and they're trying to continue this thing going higher. So, all right, for such great earnings, the S&P 500, which is the stock market, doesn't look too good today. We're down, 0.3%, not a huge sell-off, but ultimately you've got the 5 market leaders reporting good earnings, and the market is down. So that shows that there is a lot of selling taking place across the general market, and the only reason we're even probably up slightly at 0.3% is because those 5 stocks are such heavily weighted in the market, in the indices. And this is what a very thinly breadth market looks like. You can see here that literally the entire market, the entire stock market is selling off. Pretty red day, and you've got 3 stocks, Amazon, Facebook, and Apple. And the market can't survive on 3 stocks. That's the reality. The rally can't survive with 3 stocks. We're not going up anymore. We might go sideways, and then the rest of the market catches up. But the market's not going to go up, even if these 3 stocks are very heavily weighted. But you've got Google dragging on it, you've got Microsoft dragging, and so the market's, and then the rest of the market's selling off. So if you think the rally is going to continue, then I guess you're betting on 3 stocks. At least for today. Of course, today is not the trend. One day doesn't make a trend, but this is not the kind of price action you want to see for continuation of the bull market. If you had really good earnings in a bull market from the market leaders, the rest of the market would rally with it, and you're not seeing that. All right, so S&P 500, back to the technicals. S&P 500 is, back below this island reversal top. Now, this island reversal, if I go to the daily, you can see it here. It's not really in play anymore. It's right here. It's been negated pretty much with this price action, so we can't trade against it anymore. But I think it's just worth noting that it keeps, the market is not able to move too much higher. It popped it, and now it's just struggling. It's going sideways, basically. I mean, we've been sideways since we popped it. Here's the breakout, and we're, 11 days. So over 2 weeks since we popped it, and we're just still holding, struggling with this breakout. So something to keep a note of. And the SPY, if you look at the hourly, broke the trend. Here's the trend coming off the March lows. And, a couple reactions. You got the lows. You got one reaction here, and we broke, and we're back testing. Here's like a kickback rally. This was another one when they popped it and selling off. So big money is selling. That's the point that I'm trying to make. Let's look at some of these sectors. XLV selling. You can see here that the daily. You've got your resistance line right here, and they were up near resistance. It looked like a good area to potentially short, and sure enough, more selling today. So that looks bearish. Ultimately, I think we might hold here today and not go anywhere. But ultimately, this is set up to continue to the downside, looking down towards 97. XLF. There's a daily chart. And, we're starting to break down. Now, it could easily still hold. Here's the hourly. They've done a couple false breakdowns already, 2 actually. Here's your trend line coming off the March lows, reaction right here. And then I said this looked weak because we're just struggling along this trend line. We're not able to really bounce off of it anymore. We had a breakdown. It was a whipsaw. recovered it, breakdown again, whipsaw. Today, gap down, and we'll see. So if they can close it down here, below support, then, we'll watch for maybe another an impulsive breakdown day. You need to see not these little red candles. You want to see a nice big red candle breaking down, and that would clearly set this trend to the downside. That's what I'm looking for. And look for volume. Always look for volume. XLK. Here's a daily chart, and you can see lots of reactions along this trend line. We broke down, and here's a back test. Now, let's see if we can draw this a different way, just to make sure that we've got everything. So here's your March lows. You could draw it off the March lows, but you just don't have a lot of data. I mean, you could make this, but then you're only getting a couple reactions recently. You could make, there's just really nothing you could make to be a trend line except for kind of the one that I have. So if, this one here, you could move it up slightly there and just capture, reaction cluster here, 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 here. This, see the wick, so it undercut it, but still closed, broke down a little bit. So it's in the area, but this still looks like a breakdown and a back test. That's what this looks like. It could go higher and back test again, or, keep back testing higher, but pretty impulsive selling candle down. It looks like we're getting the continuation. So you've got selling down, then you have the reaction pop, and then usually at that point you continue that initial move. So we'll see, but larger chart on the daily really looks like we broke down and are making a back test. So in general, it's bearish. This is what I talked about earlier. I said, look, even if we do a back test, it's still bearish. It's still an opportunity to short. It just gives you a more objective area to short. But we're below support. We're below the trend. All right, that's the point that I'm trying to make. Okay, let's look at these FANG stocks. We'll go through these because this was where all the hubbub was all about. So, all right, Apple, yeah. It's up 6%, 6.4%. So let's see what's going on in Apple. Here's what I got. I've been trying to mark out some of these trend lines. This is coming off the March lows here. And, maybe this is a back test. It's not the cleanest. Now this one looks a lot better. I've got reaction here, lots of reactions along this trend line. And we broke down and recovered it. So let's see what this does. If this can hold up here, then it's a recapture of support. That means this was a false breakdown or a bear trap. But with the rest of the market doing what it's doing, I think we're not going to. I think we're going to sell off. I think Apple's going to close below this trend line here, and that will have been the back test. It just overshot it on some momentum. I think it sells off and closes below the trend line. Could be wrong though. We have to wait for the daily close on that one. Microsoft. Microsoft's weak. You look at Microsoft and down 1.5%. They are, you've got support right here at 201.36 or so. And, that comes from back here. And we're just chopping around it, but looks like it's starting to sell off. So we're going to have to watch this. Looks weak to me. Microsoft, the other thing is Microsoft broke down from this trend line right here. You can see the trend broke down. So I think this is going to continue to break down. Microsoft, if I go to the daily, you've got some longer term support lines on Microsoft. On the daily, you've got some support way down here. So I think we're going to come down and tag that, which is down around 160. And from where we're at now, that's a good 20% down. So that's where I think Microsoft heads in the short term. And then if I look at the longer term, going back to the bull market trend in Microsoft, it's all the way down here. So Microsoft could easily fall quite a bit if it was to come all the way down here. I mean, that's 50%. That might be all you're going to get in Microsoft to the downside. I don't know. Microsoft's really run up, so it had almost a blow off top, so it could easily fall 50% or more. We'll have to watch this. But that's bigger picture stuff. For now, just keep an eye on these hourlies, see what's going on. It continues to look weak. I think we're going to break down more. Amazon, Amazon here, here's what I see in Amazon. You got to start with the daily to get the full picture. On the daily, you got the bearish engulfing outside day candle. So that's your reversal candle. When you get a reversal candle, you look for continued selling or confirmation follow through, and you got it. You got 4 days of selling right here. Then you had a kickback rally. Then so ultimately we're just chopping sideways. They popped it again today, but the sellers came in. Each time Amazon's getting up here, the sellers are smashing it down. Sold it here, sold it here, sold it here. So this most likely gets us a continuation to the downside, and then we need to break this up channel right here on the daily chart. Going to the hourly here, you can see just selling, a little kickback rally, and it probably is going to continue. Might even fill the gap today. We don't know, but it might do that. Here's Google. Google's the weakest of them all, down 4%, and Google had its first revenue loss in history, or declining revenue or something. And so, I mean, is that something that takes place in a strong economy when you've got, Google, who's been a powerhouse stock, is starting to have their very first revenue decline in their history? I mean, fundamentally, that's not good. And technically not good either. Here's your breakdown. Nice clean breakdown of your support. It's impulsive with volume. Let's look at the daily here. We'll need to see the daily volume increase, but that's what you want to see. We've already got we've already got average volume over the last little while, and we're just a couple hours into the trading day, so should see continued volume increasing. And then if this sticks and actually holds, then that's a breakdown. So we'll watch that, but that is looking not good right now for the bulls. Let's look at this SOXX, which is semiconductors. This is, where's my hourly? There it is. So SOXX is a semiconductor ETF. Semiconductors are usually will run farther to the upside in tech, and they'll run farther to the downside in tech. They're kind of the leading indicator in tech. They're very cyclical, and when semiconductors aren't doing well, typically big cap tech will follow. And here's what we got in SOXX. Uptrend, clean uptrend right here. Reaction, 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 breakdown, back test here, full back test right there. Nice kickback, back test, and rejection. And we're seeing continued selling. You had the rejection, you had the bounce or dead cat bounce, and then you're getting continued selling. So I think this is heading down, and if this goes down, that's probably going to be an indicator for big cap tech. This is another thing to look at. I always look at it, but the bond market's 10 times larger when it comes to the money that's in the bond market than the stock market. And the bond market's been in a 40-year bull market basically, but you can see here, look at the daily here. And this is what's been going on the entire rally in the stock market. Bonds have been getting bought up at really low yields. And yes, some of this is the Fed, but it's not all the Fed. And the market is continuing to buy bonds. Bonds are a safety play. Bonds are where people go when they're trying to find safety. And so big money is looking for safety. They're not looking for risk. Stock market is for risk for the most part, and bonds is for safety. Obviously, there's safety plays you can make in stocks as well. But I just want to point that out. Bonds continues to go higher. Gold continues to go higher. This is just not something that you'd expect to see in a rally. So we'll watch. Here's the NASDAQ futures. Kind of interesting here. We have, let me go here and look at this hourly. This is coming off your March lows right down here. Here's your March lows. You had a reaction here, reaction, 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 cluster reaction right here. Breakdown, back test, didn't do a full back test, another back test, failure. So this can obviously continue to back test, but I think we're probably done. I think we're heading lower. That's just my opinion, guys. That's my video. Let me know what you guys think, and catch you on the next one.